Hey everyone, it's Pupilo Tax Agency here, and today we're talking about closing your business. We'll cover the essential steps to dissolve your business legally and smoothly. Shutting down involves more than just turning off the lights. Before you slap that close sign on the door, let's ensure you're doing everything by the book. Alright, step one is making sure everyone's on the same page about closing down. If you're a sole proprietor, congrats, you're the boss. You get to make the call. But for partnerships, LLCs, and corporations, things get a little more formal. You'll need to follow the rules laid out in your operating agreement or bylaws, which basically means having a formal vote. Document everything. Trust me, you don't want any loose ends or disagreements popping up later. This written notice is your official "we're done" announcement and helps prevent any misunderstandings or legal headaches down the line. Okay, so you've made the tough decision, told everyone involved, and now it's time to make it official with the government. This is where those articles of dissolution or a certificate of termination come into play. Think of it like a death certificate, but for your business. The exact forms and procedures can vary depending on your state, so don't just download a random template off the internet. Do your homework. Visit your Secretary of State's website or give them a call. Some states require a tax clearance certificate before you can dissolve, proving you've paid all your dues. Alright, now it's time to talk about money, specifically the money you might still owe. Notifying your creditors is one of the most critical steps in dissolving your business, and it's not something you want to mess up. Start by making a list of everyone you owe money to: suppliers, lenders, utility companies, the works. Then send them a formal written notice informing them that your business is closing and provide a deadline for submitting any outstanding invoices or claims. To cover your bases, it's smart to publish a notice of dissolution in a local newspaper. By notifying your creditors properly, you're preventing potential legal issues down the line. Chapter 4. Step 4. Canceling permits and licenses, tying up loose ends. So you've filed the paperwork, notified everyone you owe money to, and now it's time to do some serious decluttering, bureaucratic decluttering, that is. We're talking about canceling all those permits, licenses, and registrations you've accumulated over the years. This includes everything from your Federal Employer Identification Number, or EIN, with the IRS to your state sales tax permit, and even your local business license. Make a list of all the permits and licenses you have, and then contact each issuing agency to find out their cancellation process. Some might require a simple phone call, while others might have a form to fill out. Chapter 5. Step 5. Filing final tax returns. The dreaded but necessary evil. Taxes. Can't live with them. Can't dissolve your business without them. Filing your final tax returns is non-negotiable. Check the box that says final return. File final returns for both federal and state income taxes. Don't forget payroll taxes if you have employees. Corporations. File Form 966 for dissolutions. Consult a tax professional for help. Chapter 6. Step 6. Divvying up the spoils. Congratulations. You've made it to the fun part, distributing remaining assets. How you divvy up assets depends on your business structure and agreements. If you're a sole proprietor, it's all yours. Partnerships, LLCs, and corporations distribute assets by ownership percentages. Be mindful of capital gains taxes. Consulting a tax advisor can minimize your tax liability. Chapter 7. Step 7. Maintaining records. Don't toss those documents. Alright, you've jumped through all the hoops, dotted your I's, and crossed your T's. Before you pop the champagne, there's one last thing: maintaining your business records. Keep those tax returns, financial statements, meeting minutes, and any other important documents for at least 3 to 7 years. Think of it as an insurance policy against audits, legal disputes, or even just needing to reference something down the line. And here's a pro tip: digitize everything. Scan those documents and store them securely in the cloud. This not only saves physical space, but also makes it easier to access and share your records if needed. Dissolving your business might seem overwhelming, but by following these 7 steps, you can ensure a smooth process. Remember, consulting with a tax professional can help you avoid costly mistakes along the way. If you need expert guidance, reach out to Pupilo Tax, where we specialize in helping businesses navigate the complexities of dissolution. Don't forget to like this video if you found it helpful, and subscribe for more tips on managing your business successfully. See you next time.